Well, JP, once again, Hong Kong markets were one of the performers in Asia today, with sentiment shaken by the recent protests against the extradition law. Can you give us a better idea of how this has affected the mood over at the Hang Seng?
Well, we saw the Hang Seng actually losing ground a while ago, but right now, as I check, the Hang Seng has actually also staged a bit of a last-minute rally, and they have closed relatively flat. Taking a look at the Hang Seng at the moment, Bernard, you're seeing that they actually are up by about 3.5 points, and it's also happening on a day when when lawmakers in Hong Kong decided to delay the debate on the extradition bill. As you know, the extradition bill is supposed to make it easier to send suspects from Hong Kong to Beijing for trial, but it also has raised fears among citizens there that it might be used to silence freedoms and opposition in Hong Kong. Hence the protests. Now, again, it has affected market sentiment despite today's last-minute bounce back for the Hang Seng, and it has also spooked business owners and corporations domiciled in Hong Kong. It might continue to pose problems for them unless this is cleared up. So I spoke to Peter Chun, who's the founder of Silverbear Capital. He's also based out in Hong Kong, and he spoke to me briefly about what the protests actually did to market sentiment in Hong Kong and what sectors might be most vulnerable to this unrest. Here's what he had to tell me.
Well, actually, as you can see, this is the biggest demonstration since the hangover of Hong Kong. So a lot of people went on the street. Banks is closed. A lot of the service sectors is closed just because of this demonstration. As you can see, the Hang Seng Index have already reacted to the situation. As you can see, it's not on the upside. I would believe the property price will then be adjusted because basically what most people would be looking for would be a readjustment to how Hong Kong would be positioned on an international status.
So on that note, do you think that the property sector will be the ones that will be most affected by all of these developments, and or are there other sectors that might actually be vulnerable?
Well, there's already talks right now that a lot of the investments is going to be pulled out if the bill does get passed. So it's the real situation which China has to face.
Well, that's Peter Chun of Silverbear Capital saying that property stocks might be the most sensitive or vulnerable to these tensions and uncertainties from the civil unrest in Hong Kong. And checking in on some of these developers, you're seeing the likes of CK Asset over in the Hang Seng down by 0.4%. Hang Lung Properties also down by about 2%. And also the likes of Sun Hung Kai also trading relatively flat over in Hong Kong today.